Hello everyone and welcome to another edition of Ask the Trader. It's May and we've got a lot to cover off tonight. Slightly different variation on the rundown, what we're going to cover off, but we are going to start with some announcements. Now, copy trading. As some of you have seen, it is now totally live. P&L probably up nearly 7% now in about 10 days since we've started. And if you want to learn more about the copy trading service, then you can go to the YouTube channel. As you can see there, little playlist called Copy Trading Service. It's got all the videos you'll need to go through there. Like I said, it covers off all about the background to it, how it works, expectations. And the other video in the playlist will help you, join up, step-by-step guide on how to do it. But so far, so good on results. Now, that leads me nicely into the next point, which is live streams. I'm going to be doing some live streams in May, and the first one up is next week. And why did I say it's leading in from the previous statement of copy trading? Well, I'm going to do a regular monthly sort of Q&A performance review of the copy trading service for those that maybe haven't joined in yet, want to ask questions or want to see what it's all about, or for those that are in it and want to get into more of the detail of the service. I'm also going to put out a quarterly report for investors as well, which will be a PDF format. And hopefully, if I've got time, then I'm going to put another couple of live streams out later in the month. One on the Darvas strategy, which is already a big video out there, course tutorial in the ultimate free trading playlist, how to do it. But I thought I'd go through it step by step and sort of update some of the stuff that and show you how I use it. And secondly, there, the VIX and the SPX strategy, another one I talk a lot about. And again, hopefully I'll go through that step by step. So those interested in watching, get involved in those strategies. I said the VIX one, very good for the S&P, and you can actually use it for other markets as well. And the Darvas one, good all round actually, for all sorts of instruments. And you can also use it for risk management, and like I say, I'll hopefully show you how. Then the next announcement, some of you again already know this, but I've gone live on Benzinga TV. It's a early morning show for the States, but it covers off pretty much global markets. Very quick 30-45 minute show, twice a week, Tuesdays and Thursdays. So if you want to get up to date with the markets and what's going on, tune in to that. And let's just see if I can show you that on the site. Here we go. If it loads up, there's Benzinga on YouTube. You can watch it through the live portal, and there I am with this week's edition. Early morning market watch with the TheStopHunter. So if you want to get up to speed on stuff, join in there. And then if you haven't already, we've got the free Telegram group. They call it the Traders Club, where you can interact with other traders and ask me anything you like. Put ideas out. Really is a free-for-all in the world of trading. So you'll find a link to join that under most of the videos in the descriptions that I put out on the YouTube channel. So that's the announcements for this week. And I'm not going to do a market overview simply because that's really covered in my Benzinga early morning market watch program. And like I said, the next version's out tomorrow, so tune in. By the way, it's 12:30 GMT, which is 7:30 in New York in the morning, and follow that. So it'd just be a waste of time us talking over stuff I'm going to talk over tomorrow. And like I said, it's out twice a week, so it covers more frequency than just this once a month session. So I'm going to go straight into the preset questions, and first bunch are from CR, and it's all actually about the copy trading fund, and I've got three. First of all, well, and like previously mentioned, I will be going in more detail in the copy trading live stream. Hopefully going to do that either Monday or Wednesday next week. I'll put an announcement out for that. But let's go through these questions now. Question 1, are trades placed manually or using an EA in the master account, including entry, exit and stop loss? At the moment it's, I would say, 50-50. There's a blend of both. I still enjoy my trading, so I do some of it myself, but there are certain markets and certain strategies underlying there that are pretty much automated, including, like you mentioned there, entry, exit and stop loss. So number 2, if more people join the copy trading service, will the lot position size increase if the available balance increases? Yes, it will. It scales up. Essentially, I'm on a fixed risk percentage size per trade, so as the balance overall increases, so will the risk amount. But because it's a PAM type account, it splits out the trade size in proportion to your own account, so don't worry if it gets bigger. Are you able to give, question number 3, a quick demo on how, if multiple copy traders subscribe, each with different size deposits, how profits are split in proportion to hers portfolio? It's sort of like question 2, really. If, for example, we've made, let's try and think one off the top of my head, £10,000, and I don't know, there's 2 people in the fund, both, you know, I don't know, with £100,000 each. I said we made £10,000. That's a 50-50 split. Each get £5,000. It's as simple as that. And then from that, my 20% profits would performance bonus would be subtracted from that. It is proportional to the size of your account on the percentage return that I have made. So moving on to the next question, got some from Daryl here, and quite heavily Renko focused his questions this month. So number 1 there, well, question 4, block size. Can we go through an example? I used Google with ATR and 50 moving average. The size I got was 2.85, so I used 50% of that and got an amount of 1.43. Does that sound correct? Well, Daryl, it really comes down to what you're trying to achieve from your strategy. The bigger the block size, the less the signals. I would probably go, well, actually I'd range it in terms of percentage. Start with normally 20% of that, and then I scale that up according to how volatile the instrument is. So say it was Bitcoin, I would probably be nearer, you know, 40-50% of maybe that ATR. So like you said there, 1.43. Google's not as volatile. I'll probably be around 25-30% of the ATR for Google. So remember, I've mentioned before volatility of different markets. FX is the least volatile. Then we have stock markets, indices like the FTSE 100, S&P 500. Then we've got well, I'd say probably stocks. We've got a different blend of stocks. You've got the big caps that are probably less volatile through to the really high risky ones, so they further down the scale. But then you've got sort of commodities plonked just after that, and then you've got the cryptocurrency world and those high risk, high volatility stocks. So factor in that to, you know, that risk to your block size, plus also how many signals do you want. You can go small in risky, but you could get many whipsaws in trade signals, you know, get taken out your trade, get false signals, just making it a bit harder for you. But it's down to the strategy. Question 5, how do I save the block sizes to each individual stock or cryptocurrency? Now I'm presuming that's within Trading View. So unfortunately in Trading View you can't save each individual block size. So what I end up doing is having multiple charts. So if you've got 5 different markets you're looking at, you're going to have 5 different Renko block sizes. It doesn't remember them. So if you've got one chart of Renko and you're in Google, then you want to flip to, I don't know, the FTSE 100, you're going to have to keep typing in the same size. So sometimes you have to have different charts saved. Question 6, if I miss the breakout of a Donchian channel, must I wait for the pullback to buy in? I suppose it depends how far it's moved. It depends what other indicators are telling you. It's a safer way to wait. Again, it depends how risk averse you are and what your strategy, your trading plan tells you to do. If you missed it and you're trading, you're a multi-asset trader, you've got lots of markets to trade, then I'd sit and wait for the next signal. There's, like I always say, there's plenty of fish in the sea. Moving on again, number 7, Renko. What is the percentage of ATR we use for block size crypto? Again, Daryl, depends completely on the strategy that you're using. If you wanted to be really fast-paced day trading at the moment, say on Bitcoin, you could be at 100 block size. I use anything from, like I said, 100 through to 500 at the moment. And remember, the bigger the block size, the slower, the more you slow it down, and the less of signals. But again, hopefully you've back tested your strategy, come out with the numbers, so play around with that block size, see what works. Is there a way to save charts that I've done TA on that I can come back to? You can save your charts. I'm presuming you're in Trading View. Let me just pull up a chart. Let's switch to that. Hopefully you can see that lot. They're up in the top right. You could rename what you've already saved and just call it another name and then redo it. As you can see, I've got a huge collection of different saved charts with all sorts of things going on that I've built throughout the years. Some I still use, some I don't. But you've just built it up in that scenario. Number 9, Renko again. If you're using Renko on daily time frames and using a Bollinger Band strategy with a stochastic, do I buy in when the projection block closes outside the upper Bollinger Band, or once it's confirmed at the end of the day? Well, if you've got the luxury of sitting in front of your charts, I would do it on the breakout of the Bollinger Band, at the time that it's telling you to do that. I suppose the question there is if you're using it on a daily time frame. Again, it's down to what you've back tested. If it works on just waiting until the end of the day and then going in, then fine. I suppose they're only temporary blocks. If you're using a daily chart within that strategy and you're watching the screens in the day, it's not actually confirmed until after the day. So I suppose what a lot of people worries about, that trade has passed you by, it's escaped you because it's moved too far. But again, to get the confidence in your strategy, it's all about back testing it. I don't use a daily time frame. Mostly mine are down in 1 minute, 15 minute, 30 minute, 1 hour, that sort of thing. I find that a 1 hour Renko chart is equivalent to like a daily candlestick bar chart. So maybe switch to an hour and go that way. You'll get more confirmed signals that way. Then we're on to 2 questions from Crypto A to Z. When using Renko charts together with the Donchian offset strategy on a breakout, should a trader use limit orders or market orders to enter and exit in either direction? Again, if you've got the luxury of sitting in front of your screens, you can use market orders. You can place stop orders in there to get into the trade or take profit orders. Totally up to you. Again, it's down to testing your strategy and what works. I have the luxury of either day trading it or automating it, which is almost like what you're saying there in question 10. Again, it's totally down to you on what works for your strategy. And question 11, and should market orders be used depending on the position size to get filled at support and resistance with liquidity at entry and exit? Not quite sure I fully understand that question, but you know, I don't think I suppose you're saying that the market, when you've got to a certain price at support and resistance, maybe there's less liquidity and maybe there's slippage if you're using maybe stop orders. Could be the same for the market at the same point. So again, you're going to have to test it, is the answer to that question. Oh, that's not one question for us, but basically we've covered off today's questions very quickly there. We've whizzed through stuff already. Do we have anybody out there with any other questions? I'll give you a couple of minutes. While you're doing that, I'll just remind you, if you're interested in the copy trading service, get to that playlist in the YouTube channel at TheStopHunter and watch the video that it's all about, taking you through it. And then the second one, if you're interested in joining, follow that step-by-step guide video. If you want to talk about it some more with other people that have joined, then join the Telegram group for free and put your questions in there. I'm sure people will be happy to discuss with you how it's been going. And also another reminder for your market fix on what's going on in the markets, where they're heading next. Tuesdays, Thursday, lunchtime, 12:30 GMT, 07:30 New York time. So Tuesday and Thursdays, it's my early morning breakfast show. We've got a question in: what are your views on the Fed raising rates? It was as expected, really, up 0.25%. They've said that this is going to be the last rise for a while, maybe with a few, decreases over the rest of the year. So it'll be interesting to watch. But essentially, I think it's all built in. People were expecting it. When there's a great tool on the CME which predicts the likelihood of interest rate risk rise. Let's see. I wonder if I can find it for you while I'm doing this now. It's called the CME FedWatch tool, and essentially it's an algorithm calculating. Here we go, found it. The likelihood of the event happening. Now, this was today's, and coming into the meeting there was a near 93% chance of it going up to 5.25%. So a very slim chance of it sort of staying where it was. So you can follow that. So the market, to answer the question, had already really priced that in. The next step will be, and often is the case in the Fed meetings, it's what they say rather than the numbers here, and people hold you accountable to it. That'll be the thing to watch. We're looking for decreasing stability, but it depends on world events in the meantime that could ruin and scupper those plans. But at the moment, I think it's going to plan, and it's sort of trying to add some stability into the markets. Plenty of opportunities to trade though, and if you're trading and you're a trader, you shouldn't really care what way round the market is going. Opportunities in both directions, but the feel maybe marginally bullish from that lot. So let's get to let's see if there's any other questions. Can't see anything there yet. Anybody got anything else? Speak now, forever hold your peace. It could be an early bath for all of us today. Otherwise, you've got your chance to ask me anything you want to. We'll give it a couple more minutes, and if not, like I said, early supper for us all. Just another reminder for those other live streams. Next week, Q&A performance review on the copy trading service so far. Then the latter part of May, we will be looking at the Darvas strategy and the VIX strategy. So looks like there's nothing else coming in, so I think we're going to call it a night early doors. So thanks very much for watching. Good luck with the trading, and I hope to see you about this time next month in June, and maybe feed me back some of your stories, some of your hits and misses of the month. Would love to hear what you've been up to. So with that, thank you very much for watching, and good night.